Hello traders and welcome to another video review. Today is Thursday, January 26, 2023. Let's take a look at the Forex calendar for today. Mostly we have plenty of data from the US scheduled for release since the 2:30. Those data are called durable goods orders. Expected to decrease from 0.1% to minus 0.2%. Gross domestic product for the fourth quarter is expected to decrease as well from 3.2% to 2.6%. We got some labor data in form of the initial jobless claims. These data are expected to increase from 190,000 to 205,000 initial jobless claims made in the last month. And new home sales are scheduled for release at 4 p.m. and new home sales supposed to drop from 640,000 to 617,000. So pretty much mixed bag of data from the US is expected. Some aspects of the US economy are expected to grow, some of them are expected to slightly decrease. Nevertheless, it will be worth to keep an eye on the US dollar today and the stock indices, the US stock indices, because those data are very important data and they definitely will have an impact on the market behavior in the short term, right? So let's start the technical part with the US dollar analysis. We got daily time frame chart, US dollar chart, as you can see here. Let me just zoom out to see the perspective. There you go. There's a massive bull rally, massive uptrend that started in the beginning of 2021, right? And this rally was from the level of 89 to basically 114. There you go. So very impressive rally. Nevertheless, just recently we got this very steep corrective cycle on the chart. So let's find out what is going on here right now. I will apply the moving average. So the moving average will be, let's say, the exponential moving average, and this is 100 periods. No, this is a simple moving average, 100 periods simple moving average. Okay, let's stick with that, and it's clear that we are trading below the 100 days simple moving average. This average is 108. Current price is 101.56. Where we are heading? We are heading towards the technical support. Where is that technical support? As far as I can see, this technical support, the recent technical support, is located at 101.27. Please notice the fact that this is the very extreme of the negative sentiment. We've been moving down since the middle of the November last year. As you can see, the bearish pressure is obvious. The momentum doesn't even try to jump above the level of 50, and if it did, then it's being reversed very quickly. Right now we are approaching the level of 30, which is of course the extreme, another extreme level. This is the level that informs us that the market conditions are extremely oversold. So on one hand, we got extremely oversold market condition coming up, which means that the US dollar is relatively very cheap if you compare it to the price 14 days back. Nevertheless, it doesn't actually look like this down move is about to stop. There is no indication of the possible termination and reversal of the downtrend on the US dollar index. So it looks like the US dollar is being sold across the board for the extended period of time, and as soon as we see any sort of the reversal pattern, candlestick reversal pattern, or different conditions from the macro point of view, we can say that okay, that's something different. Maybe the downtrend is maybe this correction to the downside is completed and the reversal is coming. The nearest technical resistance, let me just make it red. The nearest technical resistance is located around the level of 103.40. So without any kind of a breakout above this level, we cannot say that the corrective cycle is done. Okay, so this is the current situation on the US dollar index. Let me just see how much did we retrace already on this market. I will move. I will zoom out a little bit more, and let's apply the Fibonacci retracement. I guess this might be something like that. Okay, so we will take this low. Okay, we will take this low here, and we will take, of course, the recent very big high here. So we retraced more than 50% already, because 50% is around here. We broke below the 50%. 102.08 is the level of 50% retracement. The next target is 61% retracement. And this level is around 99 points. Okay, so this is the next target if the corrective cycle will be extended. That's the next target, 61% of the Fibonacci retracement. So that's the situation with the US dollar index. Let's find out what is going on with S&P 500. Daily time frame chart of the S&P 500 doesn't show us any particular direction yet. Okay, what do we have here? If we just zoom out, we can see trend line, and this is very important trend line because it's been hit plenty times. Right? Many times this line has been hit. Sometimes it was violated, but then the price returned very quickly below this line. Right now we are just above this trend line, 4,028 points. It was the last level recorded for this breakout. So well, it doesn't actually mean we're gonna rally yet. Nevertheless, let's find out intraday technical resistance. 4,136 is the next technical resistance, and similar way, let's find out where is the support. Well, support seems to be somewhere around 3,882. So that's the zone between the support and resistance. And please notice the fact that 100 days moving average, let me just change this color of the moving average to darker. There you go, it's much better now. This 100 days moving average provides support for the bulls, so they definitely recognize this technical indicator and bounced very nicely towards the highs from the last week. Today we are waiting for the test of 4,039 points, which is the high from the 23rd of the January. If this level is violated, then the next target is of course this high, 4,136. On the other hand, we cannot break below the technical support, neither 3,901 nor 3,890, which is the horizontal technical support. The line of the last resort for the bulls is the technical support located at 3,763, which is the low of this consolidation made during the Christmas period last year. So any breakout below this level would definitely extend the drop lower towards the swing low at 3,490. So that's the outlook for the S&P 500. Let's now take a look at one pair, which is very important for the US dollar. Of course, it's a US dollar to the Japanese yen. This is very important for the US economy and for the US dollar itself as well. So what do we have here? Well, basically, if we zoom out on a daily time frame chart, we can clearly see again there was very nice trend up, right, bouncing occasionally from the 100 days moving average. Nevertheless, this average was violated. That movement here looks like an extended correction to the downside, and we are now approaching another potential technical support. This support is located here at 126.38. This is the low from the last year, end of the May 2022. Okay, so pretty nice channel we have here. Let's find out what is going on there. Pretty nice channel from the high at 151.96. Let me just apply the trend line. Maybe we'll apply the line will be okay then. From this high, okay, from this high, the technical situation looks clear. Look at this beautiful technical situation on the USD to the Japanese yen. Let's double the line, and then we got very nice parallel channel on a daily time frame chart on the US dollar to the Japanese yen, moving to the downside. Momentum negative, sentiment is negative, control over this market is in the hands of bears. Okay, please notice the fact that since the top during the just before the Christmas period of the last year, right, we got this very steep sell-off, as you can see here, and since then nothing is going on the positive way. No momentum to the upside, no momentum to the level above 50. We are still trading below the level of 50 inside of the negative territory, which means this is apparently the trending market. Now we are in the downtrend on the US dollar to Japanese yen. So the market participants are selling US dollar, buying Japanese yen, selling US dollar basket against the other currencies, and in that situation the SP 500 should follow to the downside soon. Of course, the next week FOMC meeting might give us another trigger to consider. Of course, it depends, of course, if the Fed will deliver or not. Nevertheless, for the time being, it looks like the US dollar is under the big pressure, and there is no indication that this pressure is about to terminate and reverse from the technical point of view, of course. So I'm leaving you guys with this conclusions from my analysis. Thank you very much for watching this analysis, of course, and I hope I will see you guys tomorrow for the Friday's technical review. So take care and bye bye.